We spent about 6 months talking with ING, and they looked at, I think, most of the major equity crowdfunding platforms across Europe. I think that the reason that they chose us and we managed to get that deal across the line was really a combination of two things. It's scale and professionalism. So we are, one of the largest, if not the largest, equity crowdfunding platforms in Europe. Our reach, and not just in the UK but across the continent, is second to none. And I think that ING put a lot of value on the fact that we were not just going to be dealing with UK investors, not just going to be dealing with Belgian investors or deals, but that we were going to have deal flow, have investors from all across Europe. But I think that what probably really did it was our professionalism. We have from the very beginning been committed to making equity crowdfunding a proper form of investment. There are other platforms out there that I think have seen this more as sort of a bit of fun, and that's great, and it should be a bit of fun, but it also has to be an environment in which businesses are raising capital in an effective and efficient way that will help them grow, that investors are getting the kinds of protections that they need to make sure they profit from those investments. And I think as ING looked at the market, they saw us as by far the most professional outfit out there. So we acquired Junction Investments at the end of last year, really for a combination of reasons. Part of it was regulatory. They had done the hard work of setting up and achieving the regulatory approvals necessary to do what we needed to do and want to do in the US. We could have done that ourselves, but it would have taken a lot of time and a lot of effort, and being able to bring them on board was very helpful. But more than that, we got an amazing team, an amazing set of relationships. These guys have worked very hard over the 2 years since they had been founded to build a fantastic network within the US. And as a consequence of that, we are able to hit the ground running, connected to some of the biggest names in Silicon Valley as well as across the US. And we have in there two founders who are now our co-heads of Seedrs America, two highly talented individuals who can really run the business. And I think that last point is probably the most important. The US is a very big market. It's a challenging market. In equity crowdfunding, it's particularly challenging because the regulatory environment is continuing to shift. It is very hard, I think, to effectively run a business in the US from London. And to be able to have two people who really are founders by mentality taking charge and running the business for us in the US, we thought had a tremendous amount of value. Well, I'm hugely bullish on the UK in terms of crowdfunding, certainly, but in terms of FinTech and frankly many other forms of innovation. But if we just look at FinTech and crowdfunding, I think it's a combination of things. One is that I think that London has a natural place at the heart of financial innovation, has done for 400 years. And I think this is an environment in which people from all over the world come together and come up with very, very creative ways and very effective ways of financing great businesses. From the days of Lloyd's coffee houses in the 17th century. So I don't think it should come as a surprise to anyone that as FinTech has emerged as a space and crowdfunding as a subset of that, that London finds itself at the heart of it culturally. But I also think there's a very important political and regulatory overlay. I think that this government and this regulator in the form of the FCA have worked harder and thought more deeply than pretty much any other government or regulator around the world about how to strike the critical balance between innovation and consumer protection. And it's a tough balance to strike because on one end you want to let platforms be able to grow and innovate and try new things without burdening them with impossible compliance restrictions. But at the same time, if you don't provide sufficient protection for investors, you're not going to have investors coming to the market and there's no business to form. And we've seen on both sides of the Atlantic and in Asia, countries trying to strike that balance and not always doing it as effectively as possible. I think that the UK has done that very well. Everything from the embrace that the Treasury and BIS have given to FinTech innovators like us, all the way to things like what the FCA has done with its Project Innovate to support new businesses that are looking to come up with innovative financial services models. I think the UK has done the best at that, and I think that it's reaping the rewards from it. So we're thrilled to be working with Andy. It was one of these relationships that came about a bit serendipitously. We didn't set out to look for a celebrity endorsement, but he was very interested in crowdfunding. We had the chance to meet him and his team and learn, about his interests, tell them a little bit about what we did, and a relationship grew from there. I think we've gone into it for two reasons. One is about reach and is about making what we do as broadly recognized as possible. And the reality is that, while I think we've got a great name and have already gotten very well established within the community that's already aware of startups and already aware of fintech, part of our goal has to be to become a crossover business where we actually begin to appeal to a much wider audience. And working together with somebody who has such broad appeal across such a wide range of different types of people, as Andy does, is helpful for that. The press likes to write about him, the name stands out, and it has a lot of value simply in terms of expanding our reach. But there's also a branding and associational aspect to it that I think was particularly important to us. One of the things that we really like about Andy, and one of the things that really made this deal make sense, is the extent to which he and his career represent or are good models for what entrepreneurship is. Andy is not this sort of polished, easy-spoken, glitzy type of celebrity. He is somebody who, through sheer grit and hard work and a lot of just fight and a good bit of talent, has fought his way up to the top and has fought his way to success, and has done so in some very ungraceful ways at times, but he's gotten there. And that's really what entrepreneurship is about. There's a danger sometimes with early stage businesses to think that it's about the parties and the TechCrunch coverage and all of that. And that's part of it, and it's all very important, but really, successful businesses are about the day in, day out work. And Andy, more than perhaps any current world-leading athlete, really represents that, and we felt and continue to feel that having that sort of brand associated with us sent the message about what we're about. We're not about the glitz, we're not about the glamour, we're about building great businesses and making a heck of a lot of money in doing so. So FinTech has evolved so dramatically from when we set out to build Seedrs. I can remember we didn't really even have a term for FinTech. It existed, but it was used more to describe technology businesses that were sort of serving the back end of hedge funds and things like that. Suddenly we're in this very hot space, and I think entering it today is very different from what it was entering when we did. I think the key point is to try to find a segment of the market that hasn't been effectively tapped yet. I mean, when we set out to build Seedrs, we weren't really thinking in terms of joining a crowdfunding market or joining a fintech market. We were thinking in terms of the broader capital markets and how the market for early stage capital operated in a very inefficient way that we felt we could use technology to address. And that's fundamentally, I think, what success we've had to date has come from that. We found a problem, we found a market inefficiency, and we cured it. I don't think, and this isn't necessarily to put off potential competitors, but I don't necessarily know that the little bit of the market we're working in has the kinds of inefficiencies today that it had when we first started, largely because we and some of our competitors have helped address them. But there are plenty of other areas that do. There's a lot of talk about insurance and the fact that technology and all of the values that sort of lean, agile tech startups can bring really haven't penetrated the insurance world yet. It's not an industry I know much about, but if you have a background in insurance and understand the industry, I think there's probably a heck of a lot of potential there. I'm sure there are loads of others. It's really about finding where the market inefficiencies sit and where technology can help address them. So we at Seedrs are very much looking forward to FinTech Connect Live. I think it's going to be a great opportunity to meet and hear from players in the financial services ecosystem and the FinTech sub-ecosystem, really across the board. I mean, I think one of the things that we've been very big advocates for within Seedrs is working together closely with some of the traditional players as well as many of the innovators. And so we do everything from partnering with folks like ING all the way down to collaborating with some of our peer platforms. And I think the chance to get everybody together under one roof and talk a little bit about what technology is bringing to the financial services space, how the little guys can work together with the big guys, hear other people's thoughts. I always find I learn far more when I'm listening than when I'm speaking. I think it's very exciting. It's a great event and we're very proud to be part of it.